Hey everybody, happy Mardi Gras from down here in Alabama. My name is Mike. Today we're going to be going over kind of a beginner's guide to dividend stocks. We're going to go over why I believe that it's best for me and in my situation, just starting out within a new portfolio. And we're going to take a look at what my overall goal with the portfolio is going to be. So stay tuned, let's get into the video. Thanks for watching, everyone. As always, if you want to follow along with my financial journey, go ahead and hit that like and subscribe button down below. And if you want to begin your own financial journey, I have links to Webull, M1 Finance, Coinbase for all your crypto needs. You can see those down in the description. Go ahead and click on those, fund your accounts, gets us both some free money, kind of gives us a leg up on the competition. So it's been coming up on a year now since I started my whole financial journey with the stock market and trying out these new apps and brokerages and trying to get my money to work for me. Before I really started with that, my money just kind of sat in a banking account or in a savings account, and it was just accruing very little interest. And so I wanted to put it to work and kind of increase what I was getting back in returns. So probably like you, I went on YouTube, I started researching what exactly are stocks? What's the best route to help my money work for me? What am I looking at? Do I throw it all in Apple? Do I throw it all in Tesla? Tesla's huge now. But what really caught my eye was dividend investing. And what we're going to do is I'm going to kind of start from the beginning of what I learned, and maybe it helps others out as well. In the most basic terms, if you buy a stock, a single share or a fractional share, you in turn own a piece of that company. So you are a very, 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 very small shareholder within a huge conglomeration. Now, with dividend investing, the way that this works is when you have a large corporation that is making tons of profits, what they do to entice you to come be a part of their company and to own shares of their company is they pay you what is called a dividend. And a dividend is basically either a monthly or a quarterly or a yearly payment that is a small percentage of their profits. So the way this works is a company will allocate 40% of their profits to be paid to their shareholders for, I guess, kind of a reward for you owning their stock and for investing into their company. Now, of course, this dividend changes between company to company. AT&T, for instance, has a 7-ish% dividend yield. If you look at another company like PepsiCo, they're going to have closer to a 2% dividend yield. And what that dividend yield will equal is the annual dividend per share over the current share price of that stock. So this fluctuates all the time. Some companies, they'll kind of sit in that 3 to 4 range, which is right around where I look for my companies to be. But there is a ratio there. If the stock price plummets, well, then that dividend yield will go sky high. And at that point, it might throw some red flags as to what's wrong with the company. Why are they paying a 15% dividend yield? Something's happening to their stock price or vice versa. So that immediately is what drove me to dividend stocks in particular. The fact that I can always get paid that money every single quarter or every single month, regardless of what the share price is doing, I really enjoyed that because you're able to get a little more capital flow. I use what I call a dividend reinvestment plan, which actually reinvests the dividends into the stock. And what we're going to go over, that's probably the number one reason why I pick dividends shares as my number one go-to and where I put the majority of my money. And we'll take the S&P 500 for example. If you took the S&P 500 from 1993 to 2017, you would have seen an annualized growth of about 7.7%. Now, with a dividend reinvestment plan or the DRIP, if you reinvested your dividends within those S&P stocks, your annual growth would have been 9.7%. So you're looking at an entire 2% raise on what you would have gotten regardless of if you didn't put your dividend reinvestments back in. So that right there, if you're telling me that I can create that snowball effect, which is what we're all looking for, right? You're trying to put a little money as you go, and as you go, it gets bigger and bigger and bigger and bigger, and you're hoping to create that snowball and make it get bigger as fast as you can. So I felt like with the dividend reinvestment plan and the dividends themselves going back into the companies, that it would create that snowball for me a little bit quicker. That way I can possibly retire before I turn 85 years old. Right now I'm trying to get out by 65. I'm definitely a late start when it comes to investing as a whole. And of course, I have my 401k and kind of the average Joe stuff, but I really wanted a little something extra in regards to hopefully retiring a little bit early. So the second thing that really drew me to dividend stocks, outside of the little bit higher overall average growth of reinvesting your dividends, was kind of the safety behind the companies that pay dividends. Most companies that do pay a standard safe dividend are standard safe companies. These are the blue chip stocks that you've heard of. Coca-Cola, PepsiCo, Chevron, 3M, Johnson & Johnson. Kind of can't miss companies that have been around for so long. You're probably not going to get on that higher end of the growth with them, but you know you're going to get a steady, safe dividend, and that dividend is going to continue to grow every year. Most of those companies have increased their dividend payouts every single year for close to 35 to 50 years, somewhere in that range. So I want those kind of companies that I feel safe in. I know Johnson & Johnson's not going out of business tomorrow. I know they're going to keep increasing their dividend, whether it's slightly or hopefully a little more exponentially as they go. So if I hold that stock for the next 20 years, that compound growth will really start to kick that snowball up in high gear, along with their capital gains growth. I mean, these stocks are not stocks that are going backwards. They're going forwards, just maybe not as fast as, say, a Tesla or an Apple or something like that. They are growing, just probably not at the speed everyone expects them to, or expects a growth stock to do. But with that dividend reinvestment plan, you're hoping to kind of compound those gains without a lot of that risk. And for me, that really kind of speaks to my heart. I'm not a risky guy. I do like to gamble a little bit. We talked about the GameStop stocks, which, it's more of a fun thing more than an investment. You're gambling at that point. So for my investment, for my future, the safety within these dividend stocks, it gives me a little bit more risk and a little bit more play than, say, sticking it to a bond ETF like I'm 55, but at the same time doesn't really make it as risky of a play as some of like these high growth things like Tesla or any other hot EV stock or those things that are kind of picking up traction right now. I don't know enough about new companies. I know what Johnson & Johnson makes. I know what Coca-Cola makes. They're products that we use every single day. I don't know what some small firm out in California is doing with power conducting batteries. That's just not my wheelhouse. That's why I'm comfortable investing in these blue chip stocks. And the third reason I really enjoy dividend stocks kind of compounds on the second reason I like them. It's these blue chip companies. Again, I know exactly what they are. They're products that I use. They're products I can get behind. There's something that I can kind of take a little ownership of. And, if I'm going to the store and I'm looking for a product, I can go, oh, that's a Johnson & Johnson product. I'm going to grab that. Makes, be a little bit more of a part of something, I guess. Again, it's not something where I am this great guru of dividend data or stock data. It's hard for me to tell you what kind of future growth a company is going to have if I don't really have any idea of what they're making or what they're doing. So I enjoy these kinds of stocks because they're bigger names and it's something that I think we're all comfortable with. So I think sticking the large amount of my money into these stocks, letting that dividend reinvestment plan kick in, will really begin that snowball rolling downhill. And of course, the goal with all these dividend stocks is that hopefully one day you have a large enough amount invested in these blue chip stocks, in these great stocks with that dividend increasing every single year over the next 10, 15, 20, 30 years, that at some point you're getting enough dividends every quarter, every month, that they can pay some of your bills and to take some of the pressure off of you. There's nothing better than, putting your money to work for you. If you have, $900,000 after the next 30 years into an investment account that's mostly dividend driven, well, then at some point you're going to be pulling in, $1,000, $2,000 a month from dividends. And that would be huge. That's such a weight. That's mortgages. That's car payments. And that's what I'm aiming for. I'm aiming for a little quality of life. I'm an average guy. I only invest $70-something a week. That's all I can really afford. But I'm hoping that as that snowball grows, my life becomes a little bit easier. That's kind of why I got into this. I wanted that money to work for me. So yeah, that's the American dream, is to make enough money to where I'm just getting money for having money. I mean, is that not the most American thing you've ever heard? Oh yeah, they were going to give this guy, $2,000 because he owns so many pieces of so many companies that we're just going to pay him profits, and he's literally not done a damn thing. He's just kind of put his money in there, and that's my goal. That's what I want to do. I don't want to work till I'm 70. I want to be on a beach somewhere by 55, and hoping that life is good. All right, everyone. Thanks for joining. I hope this video kind of opened your eyes a little bit on someone like me who's a new investor, and why I think dividend investing is kind of the best route to go for a brand new investor before they start dipping their toes into any of the crazier stocks or any of the crazier meme stocks or growth stocks. Again, if you like the content, throw me a like and a subscribe down below. Don't forget to sign up for your links down below for the Webull, Coinbase, M1 Finance, and we'll see you next week. Thank you.